With so much going on right now in the economy and the stock market, we really need to break it down. I've got information from Goldman Sachs. I'm going to be showing you what's happening with oil. I've got a lot to cover. The first thing we need to talk about is the no pump. We are losing stimulus today, and what does that mean for you? The second thing is big dump. Are the insiders right now selling off into what was one of the biggest bubbles we have ever seen before? Or is this simply the next level higher, another step to be taken? The third thing I want to look at is oil jump. The price of oil has rocketed. I'm going to show you that and so much more. Let's begin. This information comes from Goldman Sachs. We expect fiscal support to continue to decline sharply in 2022. You can see that right now on this chart, just giving you all the different things, the child tax credit, taxes, hard infrastructure, so on, breaking that down, and where Goldman Sachs believes that this will go next year and beyond. Now, this is generally not very accurate when it comes to predictions and forecasts, but we can generally assume, at least for the foreseeable future, that there is going to be less stimulus from the government than was there, let's say, last year. So that's important for us to understand, because that fiscal support was providing a lot of extra cash for people. We saw what happened with savings up considerably. We saw what was going on when, as soon as the stimulus checks came out, they went right into the Robinhood accounts. They went right to buy the flat screen TVs and so on. Now, you could argue there are better uses for the cash, but it was a way to get money out there, that's for sure. Take it from the taxpayers, take it from the savers, and give it to those who want to pump it into Amazon stock. All right, now this is just showing us the decomposition of the euro area core inflation relative to December 2020. And just noting the fact that, okay, we're going to see inflation going down. You could see all of this and what has happened over the period. Look, doesn't matter where you look, the statistics, the expectation here is that we are going to see inflation subside. And that's only the reason why I'm mentioning this. I think it's really key to understand that, okay? And then we talk about what's happening with the stock market. T. Rowe Price, chief, warns of free-form risk-taking in buoyant markets. This individual here, by the way, retiring, and now speaking the truth. Now, I think it's interesting because you see this coming at a time when insiders are selling, CEOs are leaving at record levels, and yet most individuals are simply there to protect their bottom line. That's the way it works. I understand that. But when you hear about the former Fed governor or the former head of the, this company, that company, or institution here and there, and they start telling us things that really make a lot of sense, well then, you have to start gauging, who do we listen to? Who do we believe? And looking at this, he mentioned a few things, a few quotes, essentially that, look, over the last 2 years, there have been way above average amount of speculation. We've been in a cycle where there has been very free-form risk-taking, essentially buying everything like crazy. This is out of control, and I've covered all of that, and I'm sure you know already. Investors should remain disciplined. I can't tell you when that period of speculation will end, but it won't be sustained. Investors need to seek out active managers who are willing to step away from risk to avoid being scalded. Now, we'll see what happens, because nothing ever ends in a soft landing. It just doesn't happen. Okay, they do talk about this and what they believe and so on. To me, it doesn't matter. All I wanted to highlight the fact that we are seeing excessive risk-taking today. But what has happened in the markets? What's going on exactly? Well, here you could see the S&P 500. And that's the red line. Look at it. You see it going up. Okay, over time, right now, markets are at an all-time high, but there's something going on. And one of those factors here is the percent of the members above their 200-day moving average. And that has been going down since earlier in 2021. What does this mean? Come on, GPS, just spell it. Come on. This means that the amount of stocks that are carrying this market higher shrinks, goes lower. Only a few names are pushing the markets higher. Now you might say, okay, well, I'll just buy those few names, or I'll just buy the index. While that is okay in the short term, it shows weakness over the longer term, because that's not healthy. That isn't a good sign. You want to see a lot of the stocks. There's always going to be stocks that are not performing well. There's no doubt about it. But we want to see as many of the stocks in the index doing well. Today, not the case. Then we look at this. Gas tankers hauling US fuel crowding Europe-bound sea lanes. So I talked about that flotilla that was heading from the US to Europe, and it helped out Europe immediately. Whether or not there's going to be a lasting effect, we will see. But essentially a bunch of tankers going across, and that brought the prices that individuals in Europe were paying for their energy. There were 20 tankers bearing American gas heading for Europe, up from 15th on the day before Christmas Eve, a holiday. Another 14 vessels were headed in the general direction of Europe while awaiting final orders. So this just shows you, yes, and it had a direct impact. European gas prices dipped for a fourth straight session. Good stuff, okay? They're just showing you that more is headed that way. If you want to track any of this information yourself, I always give you my sources. And this is marine traffic. I have mentioned it many, many times before. Marine traffic. And there's part of it that's free. I don't have a login for this myself, but essentially, if you want to go in, you could take a look, and you can, it doesn't allow you to break it down. This is just the tankers. If you want to break it down by oil tankers, LNG tankers, and so on, that's when you need a membership. But you could see the tankers here and the general direction just broken down. Where they're coming from, where they're going to, it might be of interest to you. You can see this right here, just another image showing you the same thing. Taking a look at the oil price though. Look at what has happened. I mean, over the last month, things have certainly changed. If you saw what was going on, let's say a month ago, prices were down significantly. In fact, crude oil, as in the WTI crude, was down to lower than $65 a barrel. Today, it is over $75 a barrel. And that shows you speculation, that shows you the cycles and how things have changed. In general, though, commodities have risen. We have seen that. And now all of that big dip, essentially, that was experienced over the last little while has practically been erased. We are almost back to where we were. Like I mentioned in previous videos, oil hadn't performed as well as some of the other ones, despite the fact that it is such an important commodity. Interesting, to say the least. And then this. Actually, I got a couple more. The new rules of monopoly. I'm not going to get into the whole article, but we're talking about tech industry and how they're saying essentially they have a monopoly. You might agree with that, disagree with it. Okay. All I wanted to highlight was one thing. One of the biggest risks to the stock market right now is the fact that you have a handful of names, Microsoft, Apple, Amazon, and so on. These particular companies here, they have been accused of having a monopoly. Now, there has been so much pressure from the government to push through legislation to essentially squash the monopoly. I don't know if it's ever going to happen, and how weak is it really going to be by the time it makes it to the final bill. But this right here, in my opinion, is really, really big. And that is the biggest hurdle for this, whole tech industry. It doesn't necessarily, in terms of the price of the stocks, because while the stocks can continue to go higher, ultimately they're met with this fate that if something happens here, these very, very minuscule regulations that are on the tech industry changes, that could have an immediate impact. That's all. And then a couple quick things here. London exodus sees a record spend on homes outside of the city. Might want to give you an idea of what's going on here. London exodus sees record spend on homes outside of the city, just like everywhere else. People are moving from the big cities out. Why? They want more space. They want the ability to work from home. They need more rooms in their house and so on. That's going on. If you are in London, let me know in the comments. And let me know, not just in the UK, anywhere, wherever you are. Are you still seeing this trend, or is that trend subsiding? And essentially, this is just the same information coming from the Times. And I think it's important to focus on all of it, to see those changes, to see those trends. If you do agree, hit that thumbs up button. This information is being brought to you as good as I can do it, as fast as I can do it, trying to bring you the daily information, daily updates as much as I can. So I do appreciate you watching. If you want to support the channel, hit that thumbs up button. What that does is it notifies people who aren't even aware of the Money GPS, and this might be able to come up on their suggestions. So I do appreciate that very much. Every comment, every thumbs up, and hey, even the thumbs down do help out as well. So I do appreciate that. Thank you very much. If you haven't seen this video yet, you definitely want to check it out, all right? So just click it, and I'll see you there.